Hi, and you're watching The Week Ahead with London Capital Group. Now, looking at the overall trading picture for the week beginning Monday, the 28th of September, Federal Reserve Chair Janet Yellen hinted Thursday evening that the Fed are still on track for a hike later this year, but the market remains split and the US roadmap still remains unclear. So US data will be one to watch next week. Taking a closer look at some specific data releases, UK final GDP for the second quarter will be released Wednesday morning, which is expected to remain at 0.7% quarter-on-quarter and 2.6% year-on-year. Now, half an hour later, and the latest EU inflation data will be released, with ECB President Mario Draghi having recently said he will not hesitate to act if inflation outlook weakens. LCG analyst Ipek Ozkardeskaya says the inflation number will be a key one to watch.
Sterling has lost a little bit of its shine against the US dollar and the euro this week, and given the strong appetite in the US dollar, we might see some further sell-off in cable towards 150.90, 150 mark. At these levels, we think that we might have some potential good targets to enter into long positions in sterling, but it is to be confirmed. Against the euro, we have hit the midterm resistance of 0.74, and we see still some solid offers at this level. So this might be the beginning of a downside correction, and 0.70 mark is still the midterm target. Well, the inflation figure is expected to be a little bit weaker maybe, and this is going to be in line with downside projections from the ECB lately, so it's not going to be a shocker for the market. The euro has recovered quite well over the past weeks, and we might see some downside from here, especially with the US dollar back in demand. We already started hearing some chatter about the potential expansion in ECB's quantitative easing program, but Mr. Draghi, the president of the ECB, Draghi, just didn't want to confirm anything like this. So we stay on a no new environment or no fresh new environment, and still expect the euro to trend lower against the US dollar.
PMI data is in focus Thursday, with manufacturing data out of Japan, China, the UK and the US.
The Chinese PMI is going to be important, obviously, because we keep seeing the Chinese economy contracting, and the manufacturing activity in China is very much important for the market in order to trade the commodity markets. At the moment, we are still seeing some further sell-off in the commodity, especially in the iron ore, but also we might see some more weakness in the oil markets and the soft commodities also. So this is why it's going to be mostly important just to assess whether the measures that have been taken in China previously had a small impact, or it's not, or the Chinese economy has not absorbed the stimulus measures yet.
Finally, the all-important US non-farm payroll employment report will be released Friday afternoon, as will the latest average hourly earnings figures. Now, US employers added 173,000 workers in August, and the jobless rate dropped to 5.1%, the lowest since April 2008. The gain in payrolls, while less than forecast, followed advances in July and June that were stronger than previously reported. Current market expectations are for payrolls to hit the magic 200,000 mark.
There is almost no need to say that the most important data is going to be the US non-farm payrolls. The consensus is 201,000 jobs added in the US economy in September. So this is far below what we are used to over the past 12 months. The past 12-month average is 243K. So if we see some weakness, especially again, if we talk about the psychological thresholds below 200,000 jobs, the market is still going to be a little bit shaky. However, we have seen some hawkish comments from the FOMC this week. Especially Yellen said on Thursday that despite the uncertainties and the status quo that we have seen in September meeting, a rate hike, the first rate hike from the Fed, is still on the table for December. The market is giving still less than 50% chance, but we still say that if Yellen is insistently saying that something may happen, so maybe it's time to believe into this and start reshuffling the positions accordingly.
Before we wrap up the week ahead, here's Ipek with her trade idea of the week.
So I believe gold is interesting at this moment because it has hit some important technical levels this week. We have seen gold rallying to $11.55 and just come back a little bit from that high. At this stage, we still be watching a important $11.35 level, which is defined as the pivot, and it should distinguish between a retest of $11.55 if broken, which would bring us to $11.70, $11.75 levels, or if the $11.35 is not cleared, we might see a setback towards the 1100 levels, and that's going to be very important for the US dollar, because the Fed expectations are obviously the major explanatory factor of the gold move, and we might see some insightful movement from what market might be thinking about and how the market is pricing the Fed into gold prices.
So there is your snapshot of the week ahead. Join us next time, but for now, goodbye.